Hey, ladies and gentlemen, we're so excited from today's special guest. So today we got Jacob Pollack, one of the greatest quants, a leader in voice in LinkedIn. He has been leading an incredible amount of operations in the algo trading and the quant trading space for over the 20 years of experience. And we're grateful for the opportunity to host him within our show, the TradePod. So besides the excitement, and before we start, we'd love to ask Jacob a little bit about himself, so you can get to know Jacob better. So Jacob, pleasure having you here on the TradePod. How are you today?
Hi, Afek. Good morning. I'm very well. Thank you so much. Right. It's always difficult to say about yourself. Maybe I should start that I'm a physicist. So, there are a lot of people in the market being like business or something, but a physicist is a kind of state of the art in the sense of thinking, because, a physicist, I mean, I can speak for the others. When I joined university, everyone wanted to be a Nobel Prize winner. So like a Formula One drivers, we want to achieve something big. And then, the life comes. So the reality is a bit different. You cannot, that couldn't need so many winners. So basically, the difference is that we deal with the data because we, as a physicist, we want to focus on the world, how it's built, from what particles, elements, etc. And what I found over the years that it's super similar to the trading because you have a lot of multi-dimensional data and you can figure out how the market is built and make more money out of this. Right? So it's so simple, so simple, but it's so kind of analogy, right? And then it's like from the beginning. I've got a couple of like years of a corporate structures. As a young guy, I work for Microsoft, I work for Oracle. I've got my startups. I think started 5 startups in my life. First at the university, so kind of entrepreneurial approach.
In what industry have you built the startups in the financial ones, or like much more diverse niches?
I think it's always when you build a startup, it's always a question if there is a traction in the market or somebody wants to pay you for what you're doing, and not in just one and run away, just every month or every year, whatever. So I mean, the first step was super. I was super young, like 20 years old, and at the time, my girlfriend, she didn't have money for a holiday, so I said, let's start the startup, and I built a startup. I got a to be frank, I got a money from Soros Foundation. I built a proposal. They bought it, and then I hired like 10 people from university, and one of them was my girlfriend, so she earned the money. Then, of course, what happened that I forgot to pay taxes, and 2 years later, I had to pay all the taxes because I forgot, and that was a good lesson, right? I mean, I earned nothing, but that was a lesson. So I'm saying that whatever you build, you need to follow a value and you need to go. And the last startup I got was in AI space, AI machine learning space. And you can imagine that we built sort of generative AI 15 years ago. We did a transcoder encoder, and I hired top students from Warsaw University in Poland. And apparently, a few years later, one of those students who worked for me for 2, 3 years is a founder of OpenAI, right? So he worked for me. I mean, if I were more lucky, or I would say I was too early, and we were too early with the things. But we built fantastic stuff with machine learning 15 years ago, and now what I can say, it's always a learning, and all the life is a lesson, right? So we learn how to do the things which I can apply now in a training.
Hmm. All right. So, I would like to ask you a little bit, Jacob, about your experience in the quant world of the financial engineering. So basically, I would like to ask for your approach about how you look at the quant engineering today, and how it looks like by the beginning of your career, and what evolvements that the market have been through, and how do you see yourself after a long period of time being in the market?
Right. I think first of all, this is a very competitive market. I mean, there are so many great guys in the market in the world doing the same. And it's a zero sum game, so it's you have to be better than the others, right, to make money. Right? And I think that the key point is, I think one of the book of Marco Lopez de Prado, he said that you cannot be alone. You need to have like a quant team working on the different things. And then if you have a very smart, bright minds, you cannot manage them. They are like a spark. Like this, my engineers years back, the top AI guys in my startup. So you need to inspire them. This is what I like to say. I read in the book of Satya Nadella, CEO of Microsoft, when they asked him what is his role as a CEO, and he said, it's a top of $3 billion company, and he said his main job as a CEO of Microsoft is to inspire and empower people, to inspire to do more and empower to tell them that they can do more than things. And I think the same applies to quants, because we are kind of scientists, kind of researchers, and it also means that there is a lot of hard work. So my approach is that at the first, the market changed. So now we deal with much more data. We've got like normal data, pricing data, fundamental data. We have a lot of alternative data. And then when you found this data meaningful, or you find some, what we call, when you spot some insight within the data, then you can make some alpha or the edge on this out of this, right? I'm not saying that you make money out of this, but it can be related to some other stuff. So that is the first thing. The second thing, I do believe that in a sort of the frameworks, you need to be the framework. It's not like, you can go to the Medium or any blog and then read how to make a fantastic strategy in 10 lines of code. And obviously none of these strategies works, right? Even in the backtesting it works, but this is super simple and it doesn't work. The market is much more complicated. So I do believe that a good research, quant research desk have to have some a framework, which is probably built over a year or two or even more. When you build it from the scratch, then you need to and modify over the years. And the key is to test 100 different alphas, 100 different strategies, and then apply based on the regime, based on some other factors, and the markets you play, universe, etc. That has, for me, it's like in a life. You can copy from someone, but you have some ideas, and from idea to the result, even like an intermediary result, you shouldn't spend more than 15-20 minutes. And then if you see that something makes sense, then you progress, and then you build over a weeks or even months, do the paper, etc. But to be very fast, quick. So my role, as you asked me, we're building in our team, we're building the framework. We got a framework, but I'm saying building because it's continuous work. And this is something which is unique. We trying to get a super fast. I have experience as a computer dev with HPC, so I built like a scheduler for a different Docker things to run the backtester in parallel for the things and get, so we can run 100 different backtester in the same time on different machines. We can configure like GPU machine to run machine learning strategy on the different machines, and then even with the customers, we can charge them based on the usage of infrastructure. So I think this is cool, and this is how we deal with everything. And you asked me also, what is the future? I do believe that there are a lot of family offices, prop offices, who don't have enough power and skilled teams, so they will try to hire someone or rent a software like a software as a service SaaS. So we want we trade our assets, but we also want to be a top ISV for a lot of those companies to provide them the research desk, easily accessible, with a state-of-the-art technology and strategies to do that for them. This is where we are going on. It takes some more time, yeah, but yes, this is.
I would like to ask you, Jacob, in terms of backtesting, let's focus the first part of the podcast specifically on backtesting. And I would like to ask you, when you backtest a trading strategy, what important factors do you look at when you backtest a strategy, or how do you evaluate a trading strategy if it's going to be if it's going to have a competitive edge over the market or not? And what type of strategies, like a specific, if we're talking about HFT, like the metrics for its successfulness, might be incredibly different than those who goes for swing trading. So I would like to ask you, what metrics do you look at once you backtest a strategy to measure if their successfulness or an ability to trade the market? And how do you look at the strategy in terms of understanding its competitive edge over the market over the long period of time? After you realize, of course, that yeah, all right, this strategy specifically can make me money. How do you evaluate this trading strategy over time, and how do you backtest the strategy in advance?
So I mean, um, it's a huge topic basically, right? And I can I mean even I said about Marco Lopez Prado. I think that like 2 3 months ago there was a published a paper on the backtesting when he said that there's so many issues with the backtesting and it's really difficult to find the right backtester working in the market. And I'm also like saying what I read from Gene Simmons years back. He said that if you really want to be successful in this, you need to have your own backtester, which you know every single detail of the backtester. Otherwise, you use the publicly available tools with the results, which is like everyone can get. So that's why we build our own backtester. It's a huge effort, honestly, and it runs with a lot of elements from fetching data, and then not always you get the data for different markets is good quality, so you get a lot of this. Then it's like processing the data. You need to process to put some structures, and we build our backtester, which is what we call the vectorized or event-based vectorized backtester, which means we have all in the data frames and we can run across all the columns, which is super fast. So like for example, when we run strategy for 50 equities from US market, when the data is fetched, and then calculate like crossover some things, simple stuff, like just to show you over the year, over 20 years, we get a result in 1 2 seconds, right? It's really super fast, and it is all running on a computer. And then that's why we having this vectorized, we can run it multiple times and in parallel for 100 strategies at the same time and check the system, right? So another thing, when you apply some machine learning. So I read yesterday a very good one of the top quants some research saying that most of the backtesters are overfitted and with the strategies. So it's really difficult to get. So when I'm saying, I mean, how we do that? Basically, we got all this typical performance like Sharpe ratio, Sortino, and just to assess if that makes sense. We spend a lot of time in the backtesting on the risk assessment because this is how it's what is due. And basically, I mean, we did it also with like a three-step approach with the strategy. We do the signals, which comes from our signals engine or events engine, where the signals from it could be from price, could be from fundamental, from the market, and from whatever is there. What we have based on the data we got, knowing that there is some biases like look ahead bias, so we don't use the future data for the past. And then when you get a signal, then the next step is the positioning. So we position, because signal doesn't mean we need to buy or sell equities or assets. So in the positioning, we can apply like risk parity or any volatility stuff just to make a position. And it could be in here in the steps we define if you got a long short or long only strategy, whatever we want. And then we can also apply some thresholds and the limits. Like let's say in a strategy, you don't want a 20% of exposure maximum to the tech or some oil and gas sector. And in a positioning, even if signal saying buy, in a position say we are on the top, so we not increasing our position. So this is a second step after signals, and there are weights because we have a portfolios and the assets are correlated somehow, right? So the covariance matrix and all these things. So in a way to additional, and we have also constraints from the customers, like saying we don't want it this time invest or some other stuff what they said to us based on the amounts and different assets and things. So then it's the first step. So you can see it's a kind of robust and a complex. I honestly don't believe in a super simple like backtesters, which are like hundreds of lines or 50 lines even, right? Because this is what we see. So this is how we
But
evaluate.
just this question. After like a long and comprehensive, and thank you for the incredible insight. Um, what backtesting engine do you use, and what backtesting engine you think would benefit retail traders that it's been
Mhm.
enough capable of predicting the quality of successful trading strategies?
So yeah, it's a good question. So basically, I mean, like everyone, we look for all the back tester in the market, and some of them are great, like Vector BT, Quantpedia, or we use Zipline, and the others, like what just to test. And at some point, we made a decision to.
Which one do you use, or you can't
So
expose it?
we're not using them. We're not using them. We build our own. And in fact, I mean, as I think one of the things what I have in mind from the very early stage is I want to share also some information about what we do, how we do, and we somehow we share some of our backtester on the Quant Journey blog. It's a Quant Journey. We've got at Substack.com, when people can read and check how we're doing this. Right. So we build our own backtester. We have multiple modules and. We put we
What models are you talking about?
So I'm saying that, basically,
Uh,
I mean,
Tell why you can only tell why you can what you can tell, right? Just to make everything clear. Yeah, like I know how a backtesting engine is being built,
Mhm.
um, and how the brain behind the engine works. But like in terms of models, what do you mean by saying a model, like in terms of a backtesting engine?
Oh no, let's put it this
What
way.
a great
Mhm.
backtesting engine needs to what a great backtesting engine needs to have in order to deliver enough high quality results for his clients.
Yeah, so it's another great question. I think when we deal with a lot of those things, and we know that we have a different customers with different portfolios, different assets, so we built our backtester, which is capable to run different assets at the same time. And we put in modules like risk management, like performance management, like Monte Carlo stuff or any test hypothesis. Also fetching the data and also the live data. So we do the backtest and front test.
Where do you fetch the data? You fetch the data from the data provider, or do you fetch the data from the from the trader himself, or from I don't know another
So
resource?
so for us, we got a I think it's more than enough now for different data. We fetch the data from 15 different sources. We can plug in any other easily. We got some mostly through
So
APIs.
it's a price data. It's price data. It's like
It,
it's a data that what I'm asking is if that's a data that everybody can get exposed, or there is something unique that you use within your organization.
I think yes and no. I mean, so we got a
Mm.
price and fundamental data. We got some alternative data as well. Like let me say super simple. That is like the web page visitors you can manage. Then we talked with someone telling us about a number of posts for hiring new people. So you can make a like time series saying how many new guys company wants to hire and what is the turnover or attrition. And this is also showing if some companies are expanding or declining in the operations, right? So I think you know, I strongly believe that there are great data outside. That and then for our strategies, what we have with the 15 different sources is more than enough. And we also deal with some data from Bloomberg. So I think sometimes what I remember as James Simon said once, he said, when we find the alpha, we want to use it till the end. Of course, we get alpha decay and things, but this is like some people. What I saw when I spoke to the other quants, they trying to figure out new source of data beyond on top of the things. Why a lot of things and good strategies can be built whatever they have already, right? So we're not getting very fancy. We pretty much old-fashioned guys trying to do the best with what we have, right? And I think this pay off at least till now.
I got it. And I would like to ask you, Jacob, like, you know what? Let's move a little bit on from that conversation about backtesting, and I would like to ask you, how do you approach a trading strategy? Now, how do you build a trading strategy, and what assets or what instruments do you look at first? How do you explore them, and how do you understand what strategy is need to be built in order to make money from the markets?
So, I mean, there are a couple of approaches. So basically, we get more than 100 different strategies, which we test every time, every day on the US market, mostly in US market. We also have exposure to the Middle East, but it is a different topic, and that it's very niche market in some sense, but also with a good approach. So, coming back to the US market, we have 100 different strategies, even more, and we do this in different ways. So, the first one is like some strategies works, but they works in different regimes. So basically, our main goal is to identify the regime when the strategy can play, and then if it plays and brings the results, then we can apply them in the trading. Also, I mean, some of the ideas are comes from like discussion and reading the paper. So basically, spend a lot of time like reading the scientific paper. It's already said that if you read in the paper, it's there is no money behind this, right? It's like the all discussion, academia and practitioners, academic versus practitioners, but there are some ideas you can apply in a different way. So that's one thing. The other thing, what we have at some point a few months ago, we built some genetic algorithms, which taking from primitives from the price, volume, and fundamentals, and then create some of the alphas, like this factors, the alpha generating modules. So we put that, and it generates our new alphas. And we run as our backtester runs super fast. So we run on the same universe with different alphas generated by the computer. They are pre-filtered because if they make no sense, we not do it. And from that, I can get like 5 to 10 potential candidates for alpha a month. And it runs continuously because it's like permutation, it's allowed. And then when we see there is something in this, we can
Process of building an alpha. It's like, how do you resharp the alpha from the beginning, and how do you find an asset to trade on? And exactly that's a process. That's a structure. That's a structural process in order to build an alpha. Is that correct?
That's correct. Yeah. I mean, to be honest,
All right.
it's
So I'm thinking about an idea with you, Jacob, right now. There is a system or I don't know, a unique approach of creating an alpha. Right now, if I want to log into the to my computer and I want to develop an alpha, is a unique approach to develop it? Because all right, following your guidance, I need to look for potential assets and then investigate them and then to find 5 to 10 potential aspects or hypotheses in order to build an alpha. But what do you think is going to be unique within your process in order for building a sustainable alpha that will hold for a longer time with competitive edge in the markets?
so basically, yeah, we tend to be very systematic, and we apply all the data-driven stuff. So basically, this is what I said. To be honest, a lot of alphas are already executed, and then there are some ideas you can read on the Reddit, Substack, and any Discord things on the quants forums, and then try to figure out how to apply to your trading strategy. So we had this, and we have this systematic with the genetic generation of alphas or pre-alphas when we then spend a lot of time. It's pretty much boring because then you need to optimize some parameters. Like we use a simple tools like Optuna, which is a kind of modeler for parameters, which can run when we have this candidate. We can run this with Optuna just to check if there are different parameters which brings better Sharpe ratio in the same universe and other parameters. So, and this is how we do. When we see this makes sense, then it's of course kind of front test just to double check that we can make with a paper account that we can make money out of this, or we, because at the alpha, even if you put it like a cost structure and the things, we have this separate model for all the transaction costs and the things with the slippage and etc. You may miss something, and it's sometimes super difficult to find that something doesn't work. So we put it in a paper account just to test that it really makes money. And then after a week, two, sometimes even a month, we say, oh, this is a good candidate. This can be, and then we put in our kind of alpha factory where we know this. And then there are the tests over the different regimes. So we know when this alpha can work. You can set like super simple regimes like bull, bear, and the other, or high volatility. We have more than 20, even almost 30 different regimes we specify with different elements, depending on the market. And then we know in which of the regime such alpha works because we backtesting within the regime. And then what we do in the live trading is that we're trying to figure out what is the regime now, or within, it could be a couple of days. It doesn't need to be like longer. And then we know what can work with this, right? And then we blend some stuff. So this is how we work. And that brings, it also like limit our risk exposure, but also brings us the best thing. So we within the time, right? And then, yeah, basically this is how we work. I mean, it's simple, but it's really kind of boring stuff doing the things, but this is how it is.
Well, basically, after going for the practical essence of building an alpha, I would like to ask you, Jacob, if there is any possibility that we will go through an example. Let's hypothetically say that you have an idea for an alpha, and let's just think about a strategy together, and let's build something together, and let's give the audience an example of how to structure an alpha in practice. So I would like you to lead the conversation right now, and the main let's focus on the main issues in building an alpha strategy. Let's think about each and every single step, and let's try to structure an alpha right now. All right? Is that good with you?
We can try. This is not as simple
Right.
like on the podcast,
Because
but
but just giving an example, like if you have something on brain, I think that would be good. But let's think about it. Let's think about something. Let's structure something. Let's try to do something. So we'll give them a practical essence in order to go there and try to build something. So
yeah.
level one, what do we need to do?
So basically, let me stick to our backtester and the thing. So basically, what we do, um, I'm trying to see if I can open something and tell the things. So basically, the first is to decide what is a signal, how you decide the signal. If you get a like crossover, what I say before, you need to have a calculated simple moving average. And when it's like 20, 30 days or whatever, and then you can see the signal when it's like the recent increase of the price, then you can see the signal that is potentially a trend formulating, right? You can put a stochastic or whatever else you want, or RSI as well. So when you have a signal, when the signal saying buy, and let's put a very simple strategy, long only. So you get a position or you get a cash. So when a signal to buy, then you need to know what is the next step, right? You need to have a positions. You need to buy some units of some assets, right? Let's say a simple single equity, or you can say Apple or whatever, Microsoft or something else. And then when you have a signal, you see how in a simple way, it's just a binary signal 0-1, right? Because then in the more complicated way, you can strength of the signal, and then you can multiply many signals and then see the outcome. Okay, let's have a buy. So then it's a positioning. So then if we have one asset, we can say we want to buy or not. So basically in the positioning, super simple is buy let's say, one share or have zero, right? As simple as possible. But if you have this, you can in position say, yeah, which one will be simple? Yeah, that will be like 0, 1, and I have it no, and the weight will be not just as a position, and this and then if there is no signal you set, right? What you can apply here is could be like if there is signal variation. So if like every day is different, like the difference, you can say I want to hold it longer. So you can apply like a time exit. Let's say if you buy, then you hold it for like 10 days or 2 weeks or whatever. It's like a triple barrier by Marco Lopez de Prado when you have an up and down and the time exits. So you have the three barriers or triple barrier. So you can send this because this, if your strategy is based on so simple signal, it can have a lot of buy and sell and points. So you will end up with zero budget because you spend all money for transactions, right? So you want to limit this, right? And you want to keep it longer. So then you can say the signal is over some days, or there is some other technical factor which you want to check before buying, and just to confirm the move, right? And then it's like that. So basically you specify this. Then you want to specify what are the other factors or what are the other configuration things in the backtesting. So what universe, what time frame, what you want to check, what is even your exposure, and also set a transaction costs, which are different in different markets, etc. Right? And then you run over the backtest and you see how it works. What is a Sharpe ratio, Sortino, Omega? Then what we used to say, and we even share the code to get the information coefficient and hit rates just to check based on the signals how the signal, and then you put a different lag. So you check the signal over the 5, 10, 20 days with the lag, just to see if the signal really brings the value to your strategy, or it shows that for some equities in some market in some time is not the best one. So I think I wrote a post on the signal analysis. So this is quite interesting because in a very like simple approach.
How do you can analyze the signal? How do you analyze the signal in advance?
So basically, I mean, we come from the point that not every signal is information to buy. This is what I said before, right? But then you can analyze if the signal is for longer time, you can analyze how it affects. So let's say like SMA, if you get a SMA short, I mean, there are some strategies you evaluate what is 200 days, 100 days, and 50 days, and you can see if there's a dead cross on all these elements. So the same with the signal, you can check this over the longer period and see how it affects. And then you know that for some equities, let's say some assets, some signals are not the best. So I saw some of the solutions with like a dynamic change of the signals over the time, and that I think you can reach on the post in the post. It's quite a long and with long expression in even the code how to evaluate the signals. So that is something what we apply. And as I said, it's a kind of boring thing because basically you generate a strategy, then you run through the backtest, and then you try to understand if those signals play well. If not, then you need to modify. So it's like it's a lot. It's kind of, as I said, like a research. That's what I said at the very beginning. As a physicist, it's super. It's a similar job as a physicist when we deal with the data of the nature, and here we deal with the data of the strategy and the market. So it's like that.
I got it. All right. So, let's just leave the conversation about building an alpha and backtest errors and so on and so forth. And I want to ask you in particular, Jacob, um, if I would need to ask you right now of what type of business catches your interest for the most within the financial industry, within the financial trading industry, of course. Which business would you point the with your finger on in terms of its successfulness, its stability. And what I'm saying in business, I'm telling what type of investment or what type of market point of view that you tell me that is going to be the most reliable asset to get alongside. And the purpose of that question comes from my desire to know how do you think about the market and how do you approach the market in advance before you decide to make a move.
Yeah, I think it is. I mean, what Warren Buffett said years back on buy and hold strategy. We everyone knows that it doesn't work, right? Yeah. So if you want to be better than the market, we still can generate quite a good return over the years in the long term. If you want to be better than this, I think um, what we see, the market is very volatile and it's really changed over the days. And this is so you need to be very much more flexible than years back. And the access to data is, I mean, people saying that the quality of the data is not good, but still every year we get more data, which is easy accessible, or even it's much cheaper. Now you can, from some of the like FMP, EOD, you can get quite a decent data for $50, $100 a month, some limits of API. Then for most of the retail investor, it's more than enough. And then you can build some interesting stuff. So I would say what we're doing, we are much faster with adopting different regimes. We much faster with adopting the strategy space regime. We are checking a lot of elements of the market right now. And I would say from the business perspective where we're dealing, we got a fund and we're investing, but we also want to, I mean, this is my vision as I'm a quant dev and quant researcher, it's to build a framework and share with the others, a framework and the research desk. So this will like fulfill my desire to be the provider of some solutions, right? I'm not saying just alphas, because if it's always said, if you get a great alpha, you're not sharing this publicly, right? Then we get some of the customers who can get the alphas. But what we rather want to do, we want people to come to us and say, this is my strategy. I'm dealing with the Saudi market. Tell us what we can do. Can you assess this strategy? Can you modify to make more money out of this, right? Or I'm dealing in, as we have in Middle East and Africa exposure, in Nigeria, which is a big market, right? Like France or Poland or US, right? So we, what we're building over the quite a couple of quarters already, is to get a research, and the people can come to us and saying, like, we have this idea. I mean, people are smart and they have a lot of ideas. I can tell you, so many people are great ideas. But the issue with the ideas is that the ideas not executed are worthless. They have to be tested, right? Otherwise, they just ideas and they disappear somewhere. So we want to be. You come to us, you say, these are my ideas. Can you make a test to check with the back tester with all these elements? And within a week, we can tell you this is a great idea. You can make this money or in some convenience level, and or we can modify this to make even more in this market with your idea. And this is where we're dealing. And then building like kind of, I call it ISV, like independent software vendor, but it's more quant research desk to be hired like software as a service with all the skills we have, with fantastic smart guys inside to get these things done. And then I imagine that there are a lot of companies worldwide, from, let's say, family office, even prop offices, who don't have enough resources, teams, and software and frameworks built to make it happen. That's why we want to serve them, and that's my goal. And I think we are approaching that with a lot of new stuff built into the framework, from factor investing, assessing this, and etc. A lot of things. So this is where we're trying to go, and I think that would be super fantastic to get it's like renting a quant and a team of the quants with a good framework to help you assess your strategy, and that's where we want to go.
I understand. Wow, that's really comprehensive insight. And I would like to ask you uh um last comprehensive question, Jacob, because I want to make a closure for our conversation today. What type of 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 future you're planning to yourself right now? Because you have so much experience within the financial industry, and of course quants. And I would like to ask you, um, what's the future that you're planning for yourself? And I want to understand by the future that you're planning for yourself, how you will grow and how you'll grow the organization that you work in and how everything will get along in the process. So I think that question is going to be asked because we'll be able to learn more about yourself and more about your aspirations in the future. So that will be able to get to know you better.
Yeah, it's always difficult to talk about yourself. But let me put this way. I'm super happy what I'm doing now. And one of the things what my father said to me, he was super successful sport person. He played bridge. And he said, whatever you do, son, do with passion. Do with passion. And then if it is passion and hard work, because you can't do a shortcut. If it's hard work, your passion, you will be better than the others. And it's not about racing. It's not Formula One. And what we build every day, I'm working like 10 hours a day, 7 days a week for the last couple of years. And I know it's like super, super tough, but I'm seeing the progress. And for me as a person, I'm very satisfied with what we do. We made a lot of mistakes. And even recently, I watched one guy saying that in his CV, he was very successful VP of top IT companies in his life. And he said that for the next job, when he would put then in CV all the failures, not the successes, right? Because the failures also show how you assess the problems. Because many things what we do for the first time, and we try, be the other than the market. We don't want to copy paste you and other strategies and things. We want to, do ourselves be smarter than the others, and this is how it is, and it's a long race. So me personally, I'm very happy what I'm doing. I'm also sharing a lot. So I have a lot of satisfaction when I can teach people, show what we do, how we do, and this is shared on this quant journey if called Substack. Uh, and this is, I think there are no limitations as per now. I mean, I do believe that if you work on your own, there's another lesson I got after working some corporations over the years, that when you work on your own, you really spend a lot of time. You measure all the minutes you can spend on different things, and you prioritize every day. It's not that that the salary coming from someone and then it's blended with the other sales, business, whatever people in the company. You work on your own, which is tough from one point of view, but also very demanding, but also very rewarded. Because then whatever you do, you progress. And every day when I talk with people, whatever I do, it's like a compound effect. I recently watched a video of one of the professors from Stanford, and he said in life there are a couple of things, but one of the things he said it's one of the most important things in our lives, and it commons for everyone. It's a law of compound effect. So when you build day by day, it's like investing, right? It's better to get a 1% every day. I mean, you can't, but then it's in the run, then 50% every second, every whatever, every half a year. But I'm saying it's not about maths here. It's about you building every day and making it bigger, making it closer to markets, more winning. And I think, yeah, CEO of JP Morgan once said that, comparing these things, he said that he cannot compete with the passionate people who spend their time doing research, are quite smart to build what they want, right? And then obviously you can't be as big as JP Morgan, right? for many reasons, but you can find your niche, find your niche, find your customers, and and build on this, right? And this is what we're doing with this, what I said, ISV, financial ISV. This is where we want to go. And I know that we're progressing well. I see satisfied customers and people I talk to, because I think the key thing is just to talk to your customers and be open, right? Because we as humans, we really make mistakes, and this is nothing wrong in making mistakes if you can learn out from this. Yeah. And so ramping up, I'm happy what I'm doing. I know that it's a lot of hard work ahead of me and a team, that we see satisfied customers. We know what we need to do. Our roadmap is for 12 months, fully packed with some features, but we also evaluate the features based on what is an outcome from the market. Right? It's not just building super feature ready some software. It's those features which make a progress for our customers. So I think this is the kind of sweet spot, and hope that with some luck, some hard work, we can get our vision done. Yeah.
All right, Jacob. So I would like to thank you for your participation within our show, the Trade Pod. Um, we're so grateful for the for your presence here, and we appreciate it. So thank you. And
My
yeah,
pleasure.
it was an incredible pleasure speaking to you.
My pleasure. Thank you so much. Thank you, Ethik. And I hope people will get it. And maybe the
Oh,
last
Will,
word,
well, trust me.
maybe if you can find me everywhere pretty much, and I'm ready to just, if anyone wants to contact me or ask something. I mean, I'm quite busy, but if I can help someone to get a progress on and share my experience, I'm happy to do that.
Brilliant.
Just contact me. Yeah.
All right, so thank you for your honesty. And yeah, so all right, bye bye.
Bye.
And thank you for your participation.
Thank you. Thanks.